What if I told you that I could teach you an investment strategy that has accurately predicted the direction of the US stock market for more than 80% of the time from 1990 through 2021? 100% win rate. 6 trades, 6 wins. Pinterest, 100% win rate. 5 trades, 5 wins. GameStop, 100% win rate. 5 trades, 5 wins. Tesla, 83% win rate. 6 trades, 5 wins. It goes on and on and on. Just a quick note, if you enjoy this video or any of the portfolio research on my channel, please consider subscribing and leaving a like on the video. I've delayed making this specific video for months now because I'm just not sure anyone out there is interested in this type of content since it's so specific and technical. And your comments and likes really let me know that someone out there cares about the content that I'm producing. For this strategy, you only need to understand 2 indicators. Indicators are just formulas that we overlay on top of a candlestick chart to give us extra insight into the behavior of the market participants. The 2 indicators that we need for this strategy are the 200-day simple moving average and the relative strength index, or RSI. First up, we have the 200-day moving average. I could talk all day about this indicator, but for the purpose of this video, you just need to understand that the 200-day moving average is the Rubicon, which is to say that prices should never cross below it. If a price falls below its 200-day SMA, then there's a very high probability that bad things are in store for this stock. The second indicator is the RSI, the relative strength index. The RSI is a momentum indicator that compares the current price with an average of its previous prices. Most people use the RSI to measure overbought and oversold conditions, which is just another way of saying the RSI indicator reflects the amount of fear and greed in the market. The RSI might be the most popular indicator, and the vast majority of active investors are definitely looking at the RSI. But most people are using its default settings, and with those settings, I feel that that indicator is fairly useless. We're going to make some minor changes to this oscillator to give us what hopefully will be a pretty big edge. Okay, with that out of the way, let's jump right into the rules. So there's 4 rules you need to know about for this strategy. Rule number 1, the market must be above its 200-day simple moving average. Rule number 2, the 4-period RSI reading must be below 30. Rule number 3, if the 4-period RSI reading falls below 25, anytime the trade is active, buy more shares. And rule number 4 is sell or close the position when the RSI crosses above the 55 reading. For this video, we're going to ignore rule number 3 since I really want to focus on the signals themselves, not all the profits that you're going to earn. I'm going to put timestamps in the video description if you want to jump around. Next up, I'm going to walk you through how to set up your chart, and we will review some of the amazing backtest results from this strategy. Then later in the video, I'm going to focus on walking you through how to actually create the strategy and implement it yourself. Let's start by heading over to tradingview.com. Everything that I'm going to show you here today is free to do on tradingview.com. You do need to create an account, but again, that's free. Once you have that account, go ahead and click the link that says chart. This is the default view, and some people really like it, but for me, it really hurts my eyes. So I'm going to switch to dark color theme mode. If your chart isn't showing the S&P 500, then set SPY as the ticker symbol. You do that by clicking in this little window here and typing in SPY and then selecting the SPI option. First up, we're going to go ahead and hide the volume indicator for now. This strategy requires just 2 technical indicators, so let's go ahead and add them now. First up, we need the 200-day simple moving average. So we're going to click on the indicators button, and in the window, we're going to type moving average, and we're going to select the option that says moving average. Next up, open the properties window for the moving average and change the length property to 200 and change the style color to red. Next, we need to add the relative strength index indicator. So back at the indicators window, type in RSI and select the option that says relative strength index. Now open the RSI indicator settings and change the length input value from 14 to 4. Whenever you move your cursor over any bar on the chart, you'll notice the RSI reading will appear next to the indicator label. Now, without doing anything else, can you spot the buy signal based on our 2 entry rules right now on this chart? If we look here at the 14th of December, we can see that the RSI closed under 30 and its closing price is above the 200 moving average. So we would expect that our strategy is going to trigger a buy signal on the next day's bar at the open. Okay, so let's apply our strategy onto the chart and see how well or how not well these rules performed historically. I'm going to select my strategy from the indicators window. You're not going to have this strategy, obviously, but don't worry. The last half of the video, we're going to go ahead and create this strategy together. All right, so we've applied the strategy onto this chart, and we can see that this strategy has an 80% win rate. It's generated 219 buy signals, and 180 of those signals were winners. On average, each trade that was placed returned about $100, and each trade lasted about 7 days from start to finish. Now, if we look at other markets, we'll see that this strategy works just as well in some other markets. Let's take a look at the NASDAQ. So we can see here that the NASDAQ was also a pretty good market for this strategy. It was right 77% of the time. Of course, this backtest starts in 1990, and some people would say, who cares about a 30-year history? Especially when someone who just bought the QQQ ETF would have absolutely destroyed the active traders trading this strategy. And that's a great point. So let's reduce the backtest from 30 years and let's just take a look at 2020. Crazy year, stock market up and down, pandemic, lots of history. Let's see how the strategy performed last year. So we're going to change from 1990 as our start year. And we'll just cycle through all the years until we get to 2020. Notice how the percentage profitable is changing down there in our results window as we cycle through these years. It's getting more successful the closer we get to real time. Okay, so we fast forwarded to January 1st, 2020 as our start and December 30th, 2030 as our end. So it's effectively 1 year. We can see here that our win percentage has actually gone up now to 80%. If we look at the list of signals, we can see that of the 5 signals triggered, only 1 ended up as a failed trade. And that was during the pandemic crash in the spring. Now, this strategy is designed and taught specifically for trading the liquid ETF market. So that includes SPY and QQQ and IWM and the other highly liquid ETFs. But what a lot of people don't know is that this strategy wins in a lot of different markets. I really probably shouldn't show you this data because there's a lot of people who earn their livings trading this strategy every day. But here we go. I'm about to show you something truly amazing. If we take a look at some of these other markets, like, for example, let's just pick some. Microsoft, for example. We can see that in 2020, this strategy triggered 10 buy alerts, and 9 of those alerts were winners. Each trade lasted just 6 days and returned $350 per trade. Let's look at CrowdStrike. 100% win rate. 6 trades, 6 wins. Pinterest, 100% win rate. 5 trades, 5 wins. GameStop, 100% win rate. 5 trades, 5 wins. Tesla, 83% win rate. 6 trades, 5 wins. It goes on and on and on. If you want to see a crazy result, let's go take a look at Bitcoin. This is mind-blowing. 92% win rate, 12 trades, 11 wins, and each average trade returned $40,000. Are you starting to understand the value in probabilities-based investing? We're going to start by creating a new script here in the pinescript editor. This particular strategy is called RSI PowerZones. So we're going to get rid of the template code and give our strategy a title. This is the basic version of this strategy. There are lots of variations to this strategy. Remember that the first rule is the SPY must be trading above its 200-day moving average. Rule number 2, when the 4-period RSI of the SPY closes under 30, then buy the SPY on the close. Rule number 3 is to buy a second unit if the 4-period RSI closes below 25 at any time while this position is open. This effectively doubles your position. And rule number 4 is we want to sell when the 4-period RSI closes above 55. Most people who trade this strategy use options. Then you're going to want to look at 70 to 80 delta in the money calls. When they're available, they're not always available, but if you stick with the highly liquid ETFs like SPY, then you shouldn't have a problem finding the 70 to 80 delta in the money calls. Now we want to define our exit and entry criteria. So we're going to set the RSI entry to 30, and then we're going to set the RSI exit to 55. And then we're going to set the RSI oscillator length reading to 4-period. Our first entry signal is the simple moving average, so we'll set a variable called long SMA, which is equal to the 200 simple moving average. Then we'll define a variable for the RSI indicator, and we're going to set that to the value at the close of the 4-period. Then step 1 of our entry, we're going to define a long condition. So our long condition is when the bar's close is greater than the 200-day simple moving average, then we've met step 1 of the criteria. Now we want to define the ranges here so that we don't just pull all the data throughout all time. We can refine this to particular years or periods in time. So for this, we're going to start out by setting the test period start to be January 1st of 1990. And then we're going to set the stop period, the end period, to December 31st of 2021. And then we're going to define a variable that says, effectively, is today's close within this range that we've defined above? If the current bar meets all of our entry criteria, then we're ready to place a trade. So our primary condition is if the long condition, which is the closing price, is greater than the 200-day simple moving average, and we're within our test period range, then we're going to open the strategy. And we're going to buy a call contract. It's a long strategy, 100 units, but only when our RSI oscillator is reading less than or equal the entry, which was 30. Then we're going to close our strategy out whenever the RSI is greater than or equal our RSI exit variable, which was the 55 oscillator reading. And we just click Add to Chart. to run the back test and get the results. I've actually got a syntax error here, and I've mistakenly overlooked an equal sign that I need, so we'll fix that, and then we'll reapply to the chart. Okay, so the strategy has been executed, and we can see our results. This strategy has returned over 80% over the time period we looked at.